Hey, what's up, YouTube? I'm Xander Connect, and I have a trade idea for you. This morning, in my $2,000 account, I opened 10 credit spreads in 2 different ETFs. They are JNUG and JDST. These are triple leveraged to the index of junior gold miners. Now, I did this for a approximate net credit of 30 cents per contract. So if this goes according to plan, the Friday this week it expires out of the money, then I collect the full premium, which would be over $300, and that's a 15% profit in a couple of days. That would be incredible. Okay, now to make successful trades, you always need an exit plan. What do you do if it moves against you? Well, this morning that happened. Pretty soon after I opened the trade, in fact. JDST went down to $3. Now, I like to roll trades whenever it gets close to being in the money. So what I did, I planned this out ahead of time, was I rolled that 3-2 spread down and out. I rolled it down to a naked $2 put expiring the following Friday, April 3rd. And I did that essentially for free. No net debit or credit. Okay, now what would I do if it went down even lower to $2? Well, at that point, I have 2 options. No pun intended. The reason why I chose this strategy was because on the one hand, did you notice how when you roll a 3-2 put spread down to a naked 2, the margin expands by a factor of 2? You double your collateral. Well, after that point, you no longer have to do that. In fact, the collateral shrinks again. It does not grow. That is always true. When you roll a credit spread, especially in high volatility environments like we're in now, you have to expand your margin. It's not always by a factor of 2. Do your own homework, but it happened to work here. When you roll a naked put, then the margin will never expand if you just roll to the same price. In fact, it will always contract by some amount, especially now in this environment, unless you're in an unusual system of contango, but we'll get into that later. So what I did was I allocated half my account to both because of the 2 and 2, right? Expand by a factor of 2 at the most. Again, not always the case, do your homework, but it works here. And the reason why I did that was because if one goes down, the other goes up. You can't lose on both, at least in the short term. So I can use that other half of the account to shore up the one that needs to be rolled. I literally can't lose on this trade. I know that sounds cocky. I know that there are probably people watching now who want to screenshot this and play it back in the future to prove that I'm wrong. Fine, you can go ahead and try to do that. But the fact is that unless I'm greatly mistaken, I can't lose, because the worst case scenario, I get assigned at $2 for a net price of $170, right? Because of the $30 credit, or maybe even lower than that, because if I roll down to a $1 put, then I could get assigned at $1 at some point later in the future. And then from that point, I either hold it till it goes back up, or I sell covered calls against it until they get called away from me at a profit. So yes, you have to be patient. You have to allocate your account in a wise manner. You have to wait for the right opportunities, but you can't lose if you do these trades. You can lose if you trade too big and you trade credit spreads on stocks that you would not actually be able to hold if you were assigned. For example, Google, it's trading at about $1,000 now, I think. Well, if you got assigned, unless you had a lot of margin, you would need $100,000 for even one contract. You can't do it. So you have to eat the max loss if you get a credit spread that expires in the money. Yes, you can roll it, but like I said, the margin increases every time you roll, and after a certain, have to eat a massive crippling loss. So for small investors, I've always been very clear. I recommend staying away from super high value stocks unless there's an opportunity that you think is good. And even though these are kind of scary products that I'm trading, given the circumstances, since they were both so cheap, it's actually a good opportunity for small investors like you and me to trade them because, hey, at least we can actually hold them if we get assigned. Hopefully that makes sense. Again, this is a rare opportunity. I could be up 15% in a couple of days if it works out. 15% even in a month is amazing. I would be very happy with that. So I'm going to close this video out just by playing a screen recording of me talking about the trades in greater technical detail. So here's my screen recording. By the way, big shout out to David Jaffe. I know it sounds like I'm a paid promoter. I'm not, but I am very thankful to him because he took 20 minutes out of his day today to give me a free conference call over the telephone. And we talked a lot about trade ideas in great depth and had a really great conversation. Super knowledgeable trader, highly recommend. Okay, so here are the last 2 days of trading. Now, for me, as a musician, violinist, violist, right? I kind of think the same way. On a fundamental basis, we're playing the same music. On a technical basis, you know, your fingers slip, you play a little out of tune. Let's be honest, we're not always perfect. And I just wanted to share that with you because not everybody executes their ideas with the greatest technical precision. But I did okay, and here's what I did. We'll just talk about the 2 ETFs I was mentioning. Here's the opening trade right here, JDST. Opened the spreads for 35% credit. All right. Right after that, I realized I had to roll because it just tanked right away down to 3. So what I did was I bought back the short 3 puts at a pretty good discount, 92 to 60, by the way, you can see that. And separately, due to liquidity issues, I sold off the long puts, 2 puts here. Also, that gave me some time to wait for it to drop a little bit, helping the price and liquidity. Not always something I would do, but in this case, it seemed to be justified. And then with the remaining cash, I opened 3 credit spreads on JNUG. Why not 10, you might ask? Well, like I said, ideally it would have been, but let's be honest, I'm not perfect. Technically speaking, I just didn't time these trades exactly right. I was groggy first thing in the morning, didn't drink enough coffee, whatever it was. So there you go. But you can see that I rolled for essentially free and I did not lose any money. In fact, I'm very much on track to gain money on the JNUG side. I still have a little bit in cash. So as of now, I'm comfortable waiting this out till whenever I have to roll the $2 short puts, wherever they are on the screen, and or when I get assigned, or when I have to when these JNUGs are almost done, almost worthless, maybe I'll buy them back and use the collateral for something else. I hope that helps. As always, if you have any questions or comments, or just are really angry at me, that's okay too. Leave it all in the comments. I read everything. And till next time, hope you stay well and make some money. See you later.